If you're considering making a mortgage application, it's really important to understand how the lenders underwrite. So what they're looking for when they assess an application. So the three main factors are income, loan to value and evidence of repayment capacity. So income is that piece where you look and say, okay, well, what is your gross basic salary? Have you any benefits or overtime or taxable income that can be taken into account? And how sustainable is that variable income? So all the lenders work on the basis of a 3.5 times multiple of income under central bank lending rules. So that means they will take your income, allowable income, into account under their underwriting policy. The big thing to be aware of is that all lenders have different criteria over what is allowable income. For example, some lenders right now will not take bonus income into account. Others will take a different portion of, say, variable income such as shift allowances or overtime. So what basic figure they'll take into account as allowable income has a very big impact on the 3.5 times multiple. So that's income. If you look at then trying to go outside of those income levels and look for an exception, so lenders are allowed to apply exceptions to a portion of their book of business. So if you're looking for an exception to go over and above the 3.5 times multiple, the same basis of assessment of your income is put in place, in that the lenders will look at how sustainable the income is if it's variable, the industry that you're working in, any risks around that, particularly now due to COVID. The second element is loan to value. So for first-time buyers, you have to have a 10% deposit. This can come via the Help to Buy scheme if you're looking to purchase a new build, but lenders will always want to see that you've some portion of savings there that you've made yourself. So they will look at, what your loan to value is. 10% for a first-time buyer, 20% for a second-time buyer. For second-time buyers, there are exceptions available to that 20% rule, which will allow you to go up to reduce your deposit input level and go up to 90% loan to value. So it's a 10% deposit requirement. Again, this is assessed on a case-by-case basis and it's classed as an exception to central bank macroprudential lending rules. So again, 90% for first-time buyers, 80% for second-time buyers, but there is the option to avail of an exception to bring you up to 90% loan to value for second-time buyers. So income, loan to value, and the third factor being evidence of repayment capacity. So this is massively important. It's nearly as equally as important as income, evidence of repayment capacity. The bank have to see that you can afford to repay the proposed mortgage. So what they look at is a very narrow window of the 6 months immediately preceding the application. They look at your bank statements. They look to see what rent you're paying, if you're paying rent, what you're saving, what your loan repayments are if you've loans that are currently in place that will be discontinued, and they really look to see how consistent that is and what has been demonstrated over the last 6 months. And what they're looking to do is they're saying if you're looking to borrow 300,000 and your payments are going to be €1,500 or whatever it is, they're trying to see that you can demonstrate that you can afford to repay that, because they want to see that your accounts are managed in a satisfactory manner, that you can show that the repayment capacity is there. It doesn't matter if your income is really high and you've obviously have a lot of disposable income and just haven't been saving. They need to see it being saved. You can't just rely on income. You have to prove repayment capacity. So the three important factors again are income, evidence of repayment capacity and loan to value. So all the lenders across market have different criteria around how they apply their individual criteria for mortgage applications. That's why it's really important to use a mortgage broker if you're looking to take out a mortgage. A mortgage broker will have access to market-based advice, a range of lending options, and will find the best rate in term to suit your particular circumstances. That's what our mortgage specialists do at Doddle all day. They will speak with you to understand what your requirements are. They'll set out what you'll be able to borrow via all the lenders that we work with. So we work with 8 major lenders. They will outline what cashback offers mean, what variable rates mean, what fixed rates mean, whether you can overpay with a particular lender or not. So it's really, really important when you're looking to take out a mortgage to make sure you get advice from experts. My team of experts and mortgage advisors at Doddle, every day they deal with people with different circumstances, they deal with people with different requirements, and their role is to ensure that they closely as possible match the requirements of the client to the mortgage that they're looking to achieve. So contact us at Doddle if you'd like some more information. If you're a first-time buyer, if you're trading up, or if you have a mortgage and looking to switch, we offer a range of services to all products and lender options. So contact us at Doddle for more information.